Hi, everybody. This is Todd with the Forex Nitty Gritty Insiders daily video. Hope you're having a fabulous day today. Hope your week has been well. We're coming to the close of another week with some pretty fantastic moves since we talked last. You can see just on the hourly chart what has happened on the euro dollar, where we've had an increase from a low here of 124.05 up about 290 pips on within the last was about 12 hours or so, where things really just kind of took off and moved quite a bit higher. Kind of surprise, I guess, in the Euro Summit. They came up with some type of a plan to try to resolve at least some of the risk that was associated with that. And obviously the market liked what it saw, and we saw a nice, strong move to the upside here. Now, probably not a real tradable move, meaning that it wasn't something that we were so much anticipating seeing, because you can't anticipate what's going to happen. You can anticipate the volatility, and you can anticipate that things will move, but sometimes it's hard to know what that's going to do. Gold shot up about $44. Oil's up about $4, so we saw everything kind of move on that. Consumer spending fell to the lowest levels in the last 5 months. And as far as the rest of what's been going on, GDP in Canada was a little bit better than the forecast. The only thing that we're waiting for now here in about 20 minutes is going to be the Chicago PMI. So when things get volatile, news tends to cause it to react even more maybe than what normally it would, so keep that in mind. Be careful about the positions that you have going into the weekend. Lately, over the last couple of months, we've seen some pretty decent gaps in the market, and so we want to keep that in mind, that we don't hold on to a position, especially if we're close to our targets where the market might snap against us. And if it does snap against us, we know that sometimes that gap makes it so that we don't get filled at a good place. In fact, we get stopped out at a worse place than what we want. Now, I want to just spend a minute here talking about the simple trading method, and really we're looking at the price action to help us know when to enter into a trade using it. And so the first thing that we want to identify is where the trend is and what that trend looks like. Now, we'll use a 40-period simple moving average to help us identify the direction that we should be trading. And one of the things that we want to be careful about, and I'm going to blow this up to kind of illustrate it, is when we have the price. Get my drawing tool here. So far above the moving average, we have to expect some type of a retracement back down to that. Now, it might not be a strong move all the way back down, but certainly we need to anticipate a settling of that big movement, because things will tend to move back towards their moving averages. And so as we look at this, and you can see that anytime it moves an extended amount, and certainly we would consider this an extended amount, away from the moving average, it will eventually meet back up. Now, again, that doesn't mean that we're going to see it pull back strongly. It just means that they're going to meet, and that might mean that the moving average shoots up and catches up to that. So keep that in mind as you're looking for the opportunities to take trades in simple trading method. And we want to have a pullback regardless, so that we can get in as it starts to bounce back up off that support area. So identifying the trends is really the first component that we look at, the first condition that we identify to determine whether or not we should enter into the simple trading method. So as we look at these, let's go through and look at the Aussie dollar. We had a nice strong move up, and again, quite a bit of ways away from that moving average. The pound dollar, nice move up, maybe not quite as far from the moving average. US Japanese yen, pretty flat, pretty choppy right now. This week has kind of been moving sideways. US Swiss franc, well below the moving average, and the US CAD, well below the moving averages. So right now we're at a point where we have to be cautious of what's going on because the market has gone through a big move, an over-exaggeration, if you want to say that, of the movement, and we're going to be watching for some type of a retracement back down. Now, like I said, that's good because what that retracement does is it gives us the setup conditions for taking a trade in the simple trading method. And as we look at the daily charts, and we'll review some of this on our next video. But what's happening on the daily charts? Are we starting to see changes in the primary bullish or bearish trend? And if we are, then we want to maybe change our bias from that bullish to that bearish direction. And so we'll keep an eye on that. Make sure that you're prepared for any adverse reactions this weekend. Like I said, if it gaps against us, we want to make sure that we're able to take advantage of getting out before the weekend, and so we can avoid those. So if you have questions about that or anything else, feel free to let me know. If not, we'll be back. Have a great weekend, and we'll talk to you soon.